Hi everyone, let's go through my bullish and bearish low time frame and micro scenarios on Bitcoin, starting with the preferred low time frame bearish Elliott Wave scenario, where we're looking for a 1-2-1-2, this being a wave 3 in yellow, 4, and then eventually a wave 5 to the downside. In this particular scenario, because this wave 2 was so short in time and very deep as well, it retraced to the 886, we can expect, based on the rule of alternation in Elliott Wave, that this wave 4 is going to take long, but it is going to be shallow. And currently it hit the 0.236, which is absolutely a valid target for a wave 4, besides also the 382 and the 0.5 above it. Now, if we look at the 0.236 and I actually open my naked point of controls, you can see we have a naked point of control just above where price action stopped at the moment at 28.1k. But as you can see, we now hit the 0.236 twice, wicking against it, wicking above it, but at the moment not closing above it. Now, if we do look a little bit to the upside above the 0.236, I think the 0.5 can be quite an interesting area as well, because we had some resistance over here, and that eventually was not much of a support, but it can of course act as resistance once again. So if price would somehow move to the upside, it can act as resistance. Now, if we look at time, of course, wave 4 then is usually longer than wave 2. But this wave 4 at the moment is already quite long compared to the wave 2. However, if we compare it to wave 3, it is actually doing pretty good. So if we take a fib time from the high of 2 to then the low of this wave 3, and we double click and we put on the 1-to-1, for example, you can see that so far this wave 4 is still shorter than the length of the wave 3. And of course, wave 4 has a relationship to wave 2 based on the rule of alternation. But in my opinion, wave 4 also has a relationship with the corresponding wave 3. So it could still go on a little bit longer, but going all the way up to the 0.5, yeah, I'm not so sure, because that might take too long, let's say, for this wave 4 to form. But of course, you never know what's going to happen on the chart. So this is what we're looking for. Eventually, if we look to the downside, we still have an untapped daily naked point of control over here at 27k, because so far it did tap the daily that we had at 27,142, but it didn't tap the daily naked point of control. So a little bit of resistance. However, as mentioned, if this would be a wave 4 and we go down for wave 5, I think it's more interesting to look at the lows over here at 26.5k for maybe a little bit of a swing failure pattern, or price can continue to the downside, where if it does, it's going to be probably not a wave 4 or 5, I mean, because if this is a 3 and this is a 4, then the targets for wave 5 are somewhere over here. But eventually the targets of this yellow wave 5 are then the end of the blue wave 3. Then we have a blue 4 and a blue 5, where eventually, just for me in general, an important target box is this 24,850 to 24.3k target area over here, with the target area that is yellow. So we have to wait and see what price is going to do if it goes that low. Now, the more, let's say, bullish scenario is very unlikely in my opinion, but I put it on the chart at the moment nonetheless, because you always have to be prepared, where this is a 3-wave structure, then in a W, this is a zigzag in a wave X, and then eventually this has to be a 3-wave structure in a wave Y, which then has to be a zigzag as well. So like a 1, 2, 3, 4, 5, then some sort of a 3-wave, and then another 5-wave move to the downside, which is quite difficult to count here as it looks like a 3-wave. And because this wave Y is also incredibly deep, it went below the 1.618, which usually is already a rare target for a wave Y, and also the maximum target for a wave Y. This scenario seems very, very unlikely compared to the bearish scenario that we have. So the bearish scenario is definitely, as it stands now, the preferred scenario, of course, unless the bearish scenario becomes invalidated if price would go above this level, in my opinion, like far above the 0.5 fib basically. That is when things really start to become invalidated. But as it stands now, this is not really a scenario that I keep too close of an eye on, as you can see also based on my minimal analysis. I just want to say though that this cannot be an ABC. So an ABC is a 3-3-5-wave structure, and even though this can be a 5-wave structure indeed, as we also have in a bearish scenario, this wave B over here did not retrace high enough. So if this is an A followed by a B and then a C, if you want a wave C being 5 waves, wave B needs to retrace to at least the 0.9. And the 0.9 fib, well, I don't even have to show it, because you can already see the 886 is not even hit. So the 0.9 just above it isn't hit as well. So a wave B needs to retrace to at least this level over here for then a regular flat, which then is a 3, 3, and then a 5-wave move where the target is actually the low over here. So not even all the way down here, because if this is an ABC with C being far below the low of wave A and then an ABC, it needs to be more likely an expanding flat, which then is an A, B taking the high of the origin, and then a wave C to the downside. And as you can clearly see, we did not get it. So this has to be in the bullish scenario some sort of a WXY, but it is currently not the preferred scenario. If we then go to the micro scenario over here, and we have the bullish scenario in front of us, then yesterday we had this scenario as well, where we were then waiting for a bit of a retracement. Also in the comment section, I put a link, and I mentioned that check the pinned comment as well. I put a link that if price is going to take this low, another potential setup that I was looking for was this one over here, where we would then retrace below this low and then eventually move up again to take these highs. So here we have a 5-wave structure. Now, not too big of a fan of this particular scenario. The bearish scenario actually on the micro is also my preferred one between the two, but I'll show you the bullish. Of course, we need to be prepared, right? That's what it's all about. In Elliott Waves, we need a bullish and a bearish scenario in order to be prepared. So here we then have a 1, 2, then a 3, 4, 5. But as you can see, this wave 4 is very, very short in time compared to the wave 2, while usually a wave 4 takes more time and is longer. So that is something I don't really like. And then we have this then, wave 5 being the high of a wave 1 or a wave A, followed then by corrective structure, and then we want to see another impulse to the upside, where this then has to be very likely a wave 1, 2, 3, and then 4, 5. But what we can see already is that over here, the price action of this potential then wave 1 to the upside, followed by then a wave 2, 3, 4. The wave 4 here in this hypothetical, of course, scenario already entered the price action of wave 1, which is more common for a diagonal type of structure. But this would then be some sort of an expanding diagonal, and these are very, very rare. So that is not really something I like to see, the price action. Now, one could maybe say, okay, what if the low is over here and we then have a 1, 2, 3, 4, 5? Yeah, that is still possible, but it becomes quite complex to count the correction, let's say, because the reason I put wave 5 over here, and you do see an arrow, which I talk about in a second. The reason I put wave 5 over here is that we then have a 3-wave structure in an ABC, which is matching this leg to the downside very nicely, as this is an impulsive structure to the downside. So this is then an ABC, like a 3-3-5 type of move, where then over here on the lower time frames, we have another ABC zigzag. And then over here you have another some sort of a zigzag or 3-wave structure, where this move to the upside is then a little bit of a weird move compared to this being a 3, 3, another 3. And then what is this, right? This move to the upside looks then to be the start of something, because this is then like a 3, maybe another 3, and then a 5. So one could say this is a 3-wave structure, another 5-wave structure to the upside in the bearish scenario. So it's quite complex to, let's say, put this wave 2 or wave B further to the right compared to taking this low. Now, if we put this wave 5 to the right, and we don't say this is a wave B, but this is the end of 5, where then this wave 4 goes over here. Nonetheless, wave 4 is still quite short compared to wave 2, but it's at least better. Now, what I don't really like about this scenario then is that wave 5 now has the highest volume compared to wave 3. And usually in an impulse, wave 3 has the highest amount of volume compared to the wave 1 and the wave 5. So I don't really like wave 5 ending with the highest volume. Also, it didn't take any highs or whatever to basically validate the high volume that we have. So this is not necessarily something I like. And also, if this is the high of wave 5 and this is an impulsive structure, by the looks of it, of course, to the downside, you're looking for a similar structure to the downside. So if this is, let's say, a 5-wave move and this is a 3-wave move, you would then want to see another similar 5-wave partner leg to the downside comparable to this one. But we never really had it, right? We never had a quite like a similar move as this one over here. So a 5, 3, 5. No, this final leg also became a 3-wave structure over here, and then price started to move back to the upside. So that makes it more likely that this wave 5 in this particular scenario has to be this high for then a 3-wave structure, and now moving to the upside impulsively. But as mentioned, we do have overlap in price. So we do expect in this scenario to at least observe what price is going to do at the daily Nokia point of control, because this is either a wave 1 or A, 2 or B, and then a C, or eventually a wave 3. where of course with a wave 3 we go for much higher targets, and a wave C, well, the wave C actually ends somewhere around the daily naked point of control, which can also fit the low time frame bearish scenario that we mentioned, right, where eventually more downside is expected. But I think this is a better count at the moment, where we have a 3-wave structure in the wave W, then we have a 3-wave structure as well in a wave X, and then eventually wave Y. And actually, by the looks of it, what I think I forgot to do in my analysis this morning is to put the wave W to the left. So yeah, this is something I have to do later. But what I like to show you in this particular scenario, because again, this wave W over here, then we have this as a 5-wave structure, and we never got a partner leg. So I forgot to do that this morning. It's very early, guys, very early. I have so little time in the early morning to provide you with an update that I actually forgot about doing this scenario, making the others. So I'm sorry for that. But yeah, in this particular scenario, what we're basically looking for, let me remove this, is then here having a W. There we go, and I'll go into the lower time frames later for the 1 p.m. update. But then we have a 3-wave structure in a W. Then we have over here a 3, 3, and another 3 in a wave X. And then we're looking for a wave Y to the upside, where that is then also a 3-wave structure. So then we have a 3, then we have a 3, and then we have another 3, right? And that is exactly what you then want to see. Now, the minimum target for a wave Y is actually the 0.618, which has already been hit. And also usually a wave Y goes above the highs of a wave W, this high over here, or if W would be here, it still took the high, so it doesn't really matter. So it's absolutely already a valid potential wave Y if this is the 3-wave scenario that we have. Now, if we look at time, because usually a wave Y and W do have a time relationship, these lows are the same on my chart, but let's take the left low for the sake of it. Use this as W and then put it on the low of wave X. And we compare wave W to Y, you can see that currently wave Y is a little bit shorter compared to wave W, and we also didn't yet hit the daily naked point of control, which I think would be quite nice. So maybe a little bit of a move to the downside before then a move to the upside could be a nice potential move as well, where then the most common target area for wave Y is the one to the 1.236 over here, with the daily naked point of control just below it. So a little bit of a wick inside and then continuing down could be quite interesting. But if we maybe then take the other low that we have, so we put it on this one, yeah, it still didn't reach the 1-to-1. It did reach, however, the 0.618. As you can see, the high at the moment has been made exactly on the 0.618 fib time of wave W. So that is actually quite nice, and also that is fine, right? That is absolutely fine. So if price continues to the downside now, also after on the low time frame, of course, as we remember, the 0.236 from the low time frame count that we had is also right over here. So a minimum target for the wave 4, or at least minimum common target of wave 4, the 0.236 has been hit. So we have all the validity, or how you say it, to continue our move to the downside for maybe an impulsive structure. So that is why there's no trading setup also in this particular scenario to the upside. It's a lot more risky as it stands. We had a trading setup down here where the stop loss should be at least break even, if not already going out of this trade, because we're trading against the trend. And trading against the trend is more risky. So keep that into account with whatever you do, because of course it's your plan and your trading. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame video I made yesterday. And for now, I'd like to thank you for watching and subscribing, and I'll see you at the next one. Bye bye.